Welcome back, and in our top business story, a draft copy of the UAE's first ever bankruptcy law, which has been 2 years in the making, is to be finalised by the end of the year, according to government officials. On the sidelines of the Dubai Economic Outlook 2012 event, His Excellency Sami Al-Khamzi, the Director General of the Department of Economic Development, told media that the draft is 70% finished. According to a local paper, Hadef and Partners and Clifford Chance are involved in the draft, whose banking and finance lawyers were quoted as saying that the new law will not apply to government entities or those incorporated and licensed to operate in a financial free zone such as the DIFC. They added that the new legislation will be based on French and German insolvency laws. Officials added that the new law will give added security to businesses through restructuring, as well as attract foreign investment into the country. Banks should dedicate 5 times more funding to small and medium-sized enterprises, according to Dubai's Chamber of Commerce Director General, Hamed Bouamim. According to a local paper, the Director General was quoted as saying that banks should reserve 15 to 20% of their funds for SMEs, up from the current 4% if SMEs are to evolve, adding that the department is doing a lot of work with the banks. He also stated that the increase will be better for lenders, as it will reduce their exposure to big players, highlighting the fact that there is a lack of understanding about the risks of small businesses. The Dubai Chamber of Commerce is targeting at least 10,000 new business licenses this year, after recording 10,500 companies in 2010. So with that, let's now take a look at the stock indices across the GCC. We have Bruce Powers, Head of Research at Trust Securities, here in the studio with us. Welcome to the show today.
Hello.
So now the meeting was delayed, the face-to-face meeting was delayed this week, and it's been postponed to next week. What is the likelihood that this deal, bailout, is actually going to be dealt with?
Yeah, well, you know, there's a lot of risk here, so I think eventually they will reach a deal. Certainly they're starting to run out of time. It seems like we were exactly at this spot 1 week ago, and yet we have another deadline that has been broken, another extension. The Greece has said that they have met all the terms set by the European Union, but it looks like the European Union now wants to have more control over how the money is spent and more control over surveillance of the austerity measures and how they're implemented and so forth. Also, we have Finland and the Netherlands now coming in and saying that they would like to postpone the decision and give a temporary loan to Greece to meet the March 20th bond payment that they have due. This puts the whole situation even more at risk, because the more time that goes on, the more things that could come in to interrupt the process and keep it from happening.
Of course. Now, looking over to China as well, it's committed to continue investing in Eurozone government bonds. But when do you think the time will be right for them?
Well, you know, they want to support the situation in Europe because it's their biggest export partner. They've agreed to put money into the bailout, not agreed to put money, but they've agreed to eventually commit to putting money. They're sending a message to the market that they're in there at the right time, but not yet, because they want to see more done by Europe. They'd like to see them get their fiscal house in order. What they'd really like is some comprehensive, solid, clear plan of how the situation is going to be resolved. So that remains to be seen if that's going to happen. So the first thing on the table is a Greek bailout, and then further progress over how Europe is going to resolve their debt risk and cut down their deficits.